All right, Salesforce stock is trading near its 52-week low, which was $226. Right now, it's trading at $233. In this video, I'm going to evaluate this company near its 52-week low and answer if this stock is a buy. A lot of investors are asking me about Salesforce stock, so I know a lot of you are curious about this company. So I'll share with you its details, its longer-term revenue growth, its operating margins, its returns on invested capital, and then I'll share with you my proprietary discounted cash flow valuation model, which calculates the fair value of the stock. We'll also look at valuation on a forward price to earnings basis, and I'll talk briefly about what the bear case is for Salesforce stock, which I always like to consider the bear case of every investment I'm considering, the bull and the bear case. So let's jump into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's start with the company's revenue growth. From 2016 to 2025, Salesforce has increased its revenue from $8.4 billion all the way up to $38.6 billion. That's good for a compounded annual growth rate of 20%. For a long time, this company has been able to maintain this level of growth rate, which I don't think will persist. I think the end markets that Salesforce operates inside will be growing at less than this level, and I think Salesforce's revenue growth rates will decelerate over the next decade, over the next 5 years, to match the level of its growth rate of the end markets it participates inside. I am concerned, and this is part of the bear case for Salesforce, that the company will make acquisitions or overpay for acquisitions as it has done in its past. Now, there are some companies that are notoriously good at making acquisitions, incorporating them into their operations and benefiting from those acquisitions. Salesforce is not one of them. They've historically overpaid for acquisitions, and it hasn't resulted in improving performance overall to the level that matches the payment for those acquisitions. If you're interested in a company that does make very prudent acquisitions, that's Broadcom. Broadcom has a history of making prudent acquisitions that result in improving performance for the company overall. They've gotten a lot of credit for that, whereas Salesforce is kind of the opposite of Broadcom in terms of making prudent acquisitions. The next thing I wanted to compare or evaluate is the company's operating profit margins, and recently they have made significant jumps in this metric. At 20.5%, it's almost 10 times the level it was at in 2021. Salesforce was one of those companies, if you recall, in late 2022 that made massive cost cuts, massive job cuts. They announced thousands of jobs were being removed from the company, and those cost cuts have improved profitability for the company overall. Included in companies that made massive layoffs in 2022 were Alphabet, Microsoft, Meta Platforms, and many others that made thousands of layoffs when the central bank increased interest rates to fight inflation. That's when tech companies and those companies I mentioned undertook massive cost-cutting campaigns. I also wanted to look at the company's return on invested capital, which also took a big turn for improvement ever since the company initiated those cost-cutting efforts, jumping to 7.2% from 0.6%. But more importantly, it reversed that long trend line of worsening in this category and improving to 7.2%. While the number itself is not great, it's less than the company's weighted average cost of capital, which I don't like to see. The trend line improving by this measure is truly impressive, especially if the company can maintain this improvement over the next several years. So now that we looked at some critically important financial metrics, I wanted to share with you my proprietary discounted cash flow valuation, which calculated a fair value for Salesforce stock at $279 per share. And as I highlighted, the stock is trading near its 52-week low, which was $226. Its current market price is $233. The weighted average cost of capital I calculated is 11.5% for the company. And as I showed you earlier, the return on invested capital is lower than the weighted average cost of capital, which I don't like to see for companies, at least not in the longer term, which Salesforce for a very long time, over a decade, nearly a decade, has operated at an ROIC below the weighted average cost of capital. Some of that can be pointed to the company's less than enthusiastic effort to control cost and some ill-advised acquisitions, or I should say overpayment for acquisitions that haven't panned out as well as the management team was expecting. And so the ROIC has sustained and persisted below the weighted average cost of capital, which is one of the bigger risks in investing with Salesforce. Still, the intrinsic value of $279 is well above the current market price of $233, which signals that this business looks undervalued. And remember when we looked at the company's revenue growth over the previous decade at 20%, and I told you that I don't think that will persist? I have incorporated that in my discounted cash flow valuation model, where I forecast that the company will soon enter a transition period where its free cash flow will grow by only 10% and then settle down to a longer term free cash flow growth of 4.5%. And so I do forecast that Salesforce will experience significant deceleration, but that's already incorporated in my valuation, which still calculates the business as being undervalued. So I fully acknowledge that the growth rate will slow down. I've incorporated it into my valuation, and the intrinsic value per share still looks undervalued. A big note: when you're dealing with companies that are slowing down, there is a risk that management will not manage the business according to the stage of its life cycle. So if the company doesn't realize and accept the reality that it's in the slowing stage of growth and tries to make some ill-advised acquisition to re-accelerate growth, that could be a risk to shareholders, as the management team hasn't historically proven to be prudent stewards of capital. So that's the risk. That's the biggest risk here I see with Salesforce right now. I also like to look at valuation on a forward price to earnings basis, and the stock looks undervalued, historically undervalued, when looking at it from this perspective. So regardless of the perspective I take a look at valuation, it looks cheap. So on a forward PE basis, it's trading at a forward PE of 20, which is the lowest it's been going back all the way to 2018. You have not been able to buy Salesforce stock at a lower valuation going all the way back to 2018. So this is a historically cheap opportunity to buy Salesforce stock right now. Of course, acknowledging the risks that are apparent in the company, the slowing growth rate, the risks of acquisitions, the company's, I would say, mediocre investments in artificial intelligence. Okay, it's working a little bit better. Agentforce, its AI initiative, is working okay, I guess you can say. It's not like great, it's not like exciting, but it's okay, it's reasonable, it's measured. It's certainly a measured response to the changing circumstances. Overall, if I had to answer this question, which I am doing here in this video, if Salesforce stock is a buy, hold, or a sell at current market prices, I would say this stock is a buy. And I updated that recommendation here on my spreadsheet August 14th, 2025. And I've had this stock rated as a buy all year long. So it's been one of my worst performing stocks this year since it's down so much. But I reiterated that buy rating today after taking another look at the company, taking a look at its prospects, comparing it against the risk and weighing them against the valuation. I like the risk versus reward at current prices for Salesforce.
Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.